Hello friends, today we'll examine an interesting group of stocks that have routinely delighted investors and fund managers with their stellar performance. Now the entire investing community is constantly on the lookout for stocks that can give an extra edge to the portfolio, which is termed as alpha. Now simply put, alpha is that excess return that a stock or a portfolio gives compared to its benchmark. People go to great lengths to earn this alpha. Some even take undue risk and ruin their returns in the process. Hence, it is of great importance to generate alpha without taking undue risk. Now, there are few stocks or sectors that can boast of constantly beating their benchmark indices over long periods like paint stocks have done. These stocks have provided a relatively easy way of earning alpha. So let us briefly take a look at the paint sector and the companies in it. Now this sector in India is worth rupees 500 billion and it has grown at 10% CAGR over the past 15 years. This is much faster, let me tell you, than the global growth rate of 2% CAGR. Now the paint industry in India is the second largest in Asia after China and the 7th largest globally. Now sadly, there does not exist any index that exclusively tracks the paint companies. But we have plotted returns of all four major paint companies in India. That is Asian Paints, Berger Paints, Kansai Nerolac and Akzo Nobel, which sells under the brand Dulux. So we have chosen these four companies since they constitute 70% of the total paint industry in India. So if we take a look at the chart, we see that the returns of all four companies have individually beaten Sensex over long-term periods, that is over 5 and 10-year periods in a CAGR fashion. Now even if we extrapolate this comparison to all the major BSE sectoral indices, we find that paint companies win the race hands down. No index even comes closer. So let us examine the reasons for this standout performance. These are the reasons that we believe that the outperformance will continue for a long time ahead as well. So firstly, let us take a look at the sectoral and the macro reasons behind this outperformance. So firstly, the per capita paint consumption in India at 3.3 kg is among the lowest in the world. Compare this with a global average of 15 kg. In Germany, it is 18 kg, USA 10 kg and China 13 kg. So India has a lot of ground to cover. Now second, the rapid urbanization has led to uptrading from cement paints, then lime-based paints and distempers to emulsions. Urban dwellings generally use paints rather than limestone, mud and so on and so forth that is commonly used in rural areas. Thirdly, there is a steady shift in the market from unorganized to organized players, especially post GST implementation. Now, initial GST rate of 28%, which was applicable to the industry, was subsequently toned down to 18%. This benefited the sector. Fourthly, repainting of homes is more of a sentimental decision for Indians, and repainting before festive period or before weddings is considered to be socially important. Fifth, paint companies are entering auxiliary segments such as waterproofing, adhesives, putty, wood finishes and so on and so forth. Most of these segments are under-penetrated, leaving scope for the organized sector penetration and subsequent premiumization. Sixth, categories such as paints involve significant expenditure on the part of customers. Hence, consumers are not willing to risk ruining their walls or interiors by using substandard coatings. So now let us take a look at some of the company specific reasons or the financial reasons behind the outperformance that we spoke of. Firstly, the paint sector in India is an oligopoly. Only 4 players dominate this industry. Hence, there is a tendency not to undercut each other, commonly called as the tit for tat strategy. This helps all the companies to grow in their market of dominance without injuring the other players. So that's a very fine arrangement that they have. Asian Paints is dominant player in the organized paint segment in India with a market share of 59%. It is the prize maker in the decorative segments and other players simply follow suit. Thirdly, competitive collaboration in pricing helps all the companies shield themselves against variation in raw material prices. Each company has established a niche for itself, either in products or in the strategy. So let us briefly examine each company individually and find out what is the USP that the company has. Firstly, beginning with the giant Asian Paints. Now, Asian Paints has presence across all the price points. And over the years, through its R&D efforts, Asian Paints has emerged victorious in the battle of perception among its target segment, that is the customers as well as the painters. Now, the company has also focused on the lower end products, giving unorganized and marginal players a run for their money. Thirdly, it has also extended into categories such as home improvement, adhesives and several other categories. Now the next company, Berger Paints. Now Berger's premium products are cheaper compared to competition, and the company has extended to specialty liquid coating, wood coating and construction chemicals. It has not spread itself thin. By that what I mean that the company has its presence in less than 10 countries outside India, and it has focused on making them profitable rather than spreading itself thin. Thirdly, we look at Kansai Nerolac. Now the Indian entity of Kansai Nerolac makes use of the parent's expertise and the client relationships with automotive OEMs. Consequently, it controls 60% of the market in automotive paints in India and 40% in powder coatings. Also, given the sticky nature of industrial clients, or rather the industrial client relationships, there is an entry barrier for new players in this segment. Kansai has also ramped up its advertisement and promotional expenses to 8% of the revenues against normally 4% that is seen for competition. Hence it has also established a big brand for itself. And lastly, Akzo Nobel, which sells under the brand Dulux. The company has focused more on its premium products through its brand Dulux. And also, Akzo Nobel's parent is the world's largest paint company. Hence, the Indian entity can simply piggyback on the parent's R&D and technological expertise. So, all in all, owing to the reasons mentioned above, paint stocks offer a low risk, high return way of earning long-term wealth creation. These are not just defensive stocks, but these stocks are those that offer superlative returns, and these are companies which have all-weather kind of a performance. There are very few sectors or stocks which offer such a combination. This is not to say that other stocks or sectors don't offer these opportunities for wealth creation, but paint stocks are a must-have in your portfolio if you're keen on generating that alpha. The key is to decide which of the 4 companies you should own and at what price. You may leave this part to us at Research and Ranking and paint your portfolio with all the bright colors. Thank you and have a good day.